we have a phenomenal guest. We've got the Chief Product Officer for 1-800-Accountant. This is a special treat. You don't normally get to talk to somebody in the C-suite. And, this is really just a conversation. So let's get started. Welcome, Gary. Appreciate you being here.
Thanks for having me. Excited to talk about this stuff.
Absolutely. All right. So while people are getting started, maybe you can kind of give us the overview for 1-800-Accountant.
Yeah, so 1-800-Accountant is a tax and accounting firm that helps small business owners with their tax and accounting needs. As far as I know, we're the largest firm that's 100% digital. So we really talk to just tens of thousands, hundreds of thousands of businesses, and it's been a great ride. It's very interesting seeing our clients. Many of them have gone on and been wildly successful. So yeah, it's been a great time. But yeah, we're a tax and accounting firm that's 100% virtual.
And let's talk about the client aspect. When you say clients, we've got a variety of different businesses on here from just getting started in the idea phase all the way up to, much larger. What do your clients look like?
It's a very wide variety. We have traditionally worked with a lot of entity formation companies, and we perform entity formations ourselves. So we're working with a lot of business owners from the very beginning. And as those businesses grow, we grow our services with them. So, we work with the mom and pop part-time startup business up until, we have manufacturing companies with tens of millions of dollars in revenue. So it's a variety of small businesses, but with a lot of our clients, we're there from the very beginning.
Got it. And that entity formation, folks, is fairly new for them. What I love about that is, you're really helping somebody save right from the beginning on their taxes, because you're creating the entity that makes the most sense for them.
That's right. And sometimes we don't even charge any money. I don't know what we're charging now, so I don't want to get in trouble from the marketing people. But often we'll run specials where we don't charge anything for the entity formation because we want to get that client buying our tax and accounting services. And like you said, if we're able to help them from the very beginning, it often saves them a lot of money and headaches later if we're able to structure the entity correctly from the get-go.
Absolutely. So we're gonna keep talking about 1-800-Accountant as the solution for this problem. But right from the beginning, before we get too many minutes in, I want to make sure we're leading with value. That we're talking about the problem that everybody's facing, whether they have an accountant or don't have an accountant, whether they've created their entity or they haven't. I know you do have 3 slides, and they all are loaded on Demia if you want to grab one of those to talk about. But,
Okay, cool. So going back to what we were talking about, the business in general, with 1-800-Accountant, you have a dedicated accountant to help you. When we very first started out, we had a pool of accountants and trying to figure out the whole volume thing, how to service tens of thousands of clients, but still provide top-notch world-class service. So now we have dedicated accounts for people, full service support. You always know what the prices are. Generally, what we do is we set a price right from the very beginning, and we maintain that price for at least a year. And if your business grows, we'll obviously adjust that later. But it's a set fee. It's not we're not don't nickel and dime. Oh, you talked to me 3 times this month, so you're gonna get a bill for a couple $100. That's not the way it is. It's basically unlimited for that price. And our goal is always, with entity formation or anything, to provide the best tax savings possible, minimize your taxes. Hopefully, when the marketing people say maximum refund, I'm always like, well, as an accountant, I don't want to get you a massive refund because I want you to pay as little throughout the year as possible.
Right.
Hopefully you're making a ton of money, so you're paying taxes, but we want to minimize that and get to as an accountant, my goal is to get to the end of the year with my clients, either not paying and not receiving a refund, because that means they've been able to keep more of the money in their pocket throughout the year. But that's who we are.
Let's step back even before this. So why? Why have an accountant? I mean, it's easy enough now to see, with tools that the average person can manage. We can see cash coming in, cash going out. We know how much we have. We have a general idea of where we're taking the business. Why do we need an accountant? I mean, obviously we've got to file our taxes, but we could also do that for free as well. Just with some software. So, what's the value of
Right.
even having a dedicated accountant?
Yeah, the value we provide is really in the consulting services we offer. Like you said, there's lots of tech tools out there. We actually even have our own bookkeeping software that we developed in house. As time goes on, it's easier to create these applications. But the value we provide is that person to talk to help you come up with a strategy. As far as I know, the AI is not good enough quite yet to develop complex tax strategy and planning like that. So what we do is we say, okay, you put the things in all of the data in our tool or in QuickBooks or whatever, and based on that data that's coming out, what can we do to basically get you the best result possible? So that's the value that we provide is having that human help you analyze the data and take steps to maximize your tax savings.
And what's the best way to have that conversation? Is it ongoing? Is it kind of like a check-in on a certain period of time, or is it end of the year?
That's right. So it depends on the person. When you're just starting out, we generally try to talk to you, however often you want to. Some people like to talk weekly at the beginning, every other week. And then as you get more and more busy with your business, most seasoned entrepreneurs that I have as clients don't want to talk to me every week. if they were talking to me every week at that point, they would not be making as much money because they're focused on revenue generating activities. But we should at least you should try to talk to your accountant at least quarterly, if not monthly, even as a kind of seasoned successful business owner. So you do want to be in touch throughout the year so that you don't get to the end of the year and you're like, oh, I've got all these things. And, that happens way too often. We'll try to talk to people throughout the year. They're too busy or whatever. Then we get to the end of the year or the beginning of the next year, which is even worse. They'll come to us in January and say, okay, I need to look at my situation from last year. Here's all my stuff. And then we say, oh man, it's too late to really do much because the year is closed, So you want to talk to your accountant. I would say at least, we try to talk with all of our clients at least quarterly, and then more frequently if they want.
Yeah, it's nice to know that's available if you want that touch base a little sooner. So what's the big reason why you find business owners are not looking to get an accountant? They don't have one yet, or they're not engaging with them. What is that? Because it sounds like there's a value add, right? And so it's easy enough. What's the reason for not having one?
The biggest ones I see, number one is the price. People think, oh, I don't really have enough. I'm just getting started. It doesn't make sense for me to go spend a few $100 or $1,000 or $2,000, whatever it is for whatever suite of services they need. That's not going to make sense for me because I just don't have that money. I'll do that later once my business is going and I'm making lots of money. Well, the problem with that is that you've often missed out on opportunities to save money. My goal of having a client is to save them way more money than they're paying for my services. That's always my goal. In some cases that works, and in others it doesn't. If you're out of the gates and you're losing tons of money immediately, you're not going to have huge tax savings because you're not going to owe any taxes. But even in that situation, if you're a startup and you're planning on losing money for a year or two as you get your product up and running, you still want to put things in place that are going to help long term with your tax strategy. So again, I'm trying to think of cases where the return on investment isn't just very large to have an accountant. And then I'm not just saying this for us, for any accountant. You want to have somebody that's going to help guide you and give you some direction because like I said, too often we get people that come back after a year, 2 years, 3 years, and they don't come until they've got 5 or 6 notices from the IRS. Like, oh crap, I can't put this off anymore. I need to talk to somebody. And by then it's too late to do anything to save money for those years that have already passed. So yeah, that's the main reason. I think money is the primary thing. Procrastination sometimes, but again, the return on investment of having an accountant for the vast majority of clients I've seen is it makes it well worth the money that's spent.
Okay, nice. And to start early, don't wait until either you have a problem or you have revenue. Start, kind of pre-revenue, start getting started right away.
That's right. I mean, as I mentioned, we talk to clients before they've even set their business up, and this is how to tell them, this is how you set it up based on your situation. We're not lawyers, so we're not giving, legal advice or anything, but what the advice we can give is, okay, based on your specific situation, you've told me about your personal situation. Some cases I've even looked at your tax return from last year. And I know what you're planning on doing with your business going forward. Based on all that information, setting up an LLC taxed as an escort, for example, is going to be best for you based on your industry, all of that stuff. So that's where we add the value with the entity formation services is just looking at each client's individual situation and determining what's going to be best from a tax perspective for that person.
Nice. Let's touch on that real quick. I want to riff on what you had just said. I see the questions coming in, which is great. We're going to get to some of these in a minute as well. This is going to be a lot more valuable if you're providing some specific questions you want. But before we get off this train of thought, I want to ask you, because it's been on my mind, right? And so you talked about the value of figuring out the specific entity from the beginning. What if you're already incorporated, but you incorporated perhaps the wrong entity, right? So you read a blog post and you created an SCorp or a SCorp or you're a solopreneur, but you want to change that. You realize you should be in a different category. Is that easy to do? Is it too late? Like what would you recommend?
I'll tell you. I'm going to give you the most frequent situation that I've seen over the past 20 years doing this. It's somebody sets up an LLC because their neighbor said, "I've got an LLC," and so they assume that the LLC is the best way to go. And in a lot of cases, the LLC is very flexible and it is a good choice to start. But let's say you're the only owner of an LLC and you don't do anything else from a tax perspective. Well, you're being treated from a tax perspective as an LLC with a single member. You're being treated as a sole proprietorship for tax purposes. Why is that bad? Because sole proprietors for tax purposes pay 15.3% self-employment tax on top of income taxes. So let's say you're in the 25% tax bracket for federal, and you're 6% for state. I'm picking low-cost states here. And then so that's 31% combined plus 15.3% for self-employment tax. I mean, that the numbers add up very quickly. So we'll see somebody set up an LLC. They've been reporting their profits and losses on their Schedule C on their personal tax return. And they'll come to us and show us their tax return. And it's like, oh man, you made $100,000 of profits in your LLC last year that's being reported on your Schedule C. That's $15,000 in self-employment tax that you're paying. What we can do is file an S election for you. And basically what that does is it says, okay, from a tax perspective, you're no longer being treated as a sole proprietorship. For tax purposes, you're being treated as an S corporation. Now, an S corporation is an entity type that Congress set up. I think it was in the 1986 tax law change. There was a huge tax law change in 1986. And basically Congress said, okay, we want to incentivize people to set up small businesses. So this self-employment tax thing is pretty onerous. I mean, that's a lot of money. So what we're going to do is say that the profits of escorps are not subject to self-employment tax. So in that same situation that I gave earlier of someone who made $100,000 in their LLC, if it's taxed as an escort, they don't have to pay that $15,000. But there is a catch. The catch is if you are an escort, you have to pay yourself as an owner what the IRS calls a reasonable salary. It's not air quotes, a reasonable salary. I say reasonable salary like that in air quotes because the IRS does not ever define exactly what a reasonable salary is. But let's say it could be about 50%. Most accountants will put the range in between 30 and 70% of your compensation. So going back again to that example I gave where somebody's making $100,000 in profit, let's say they do the SCorp election. Okay, now none of their profits in the SCorp are subject to self-employment tax, but the business owner now is going to have to pay him or herself a salary of $50,000. Well, that self-employment tax is being paid, Social Security and Medicare is being paid on the salary portion that's being paid, but not on the remaining $50,000 profits in the business. So basically what you've done is you've cut your self-employment tax in half. So I can't tell you how many times I've talked to people who have come in with an existing LLC, and we go through their situation. They're making money in their LLC that's on their being taxed as a sole proprietorship. And I say, okay, we're going to file this SCorp election, and you're immediately next year going to save $8,000, just from one action. And then there's also all sorts of other tax strategies you can employ. But that is the most common thing that I see, is that somebody sets up an LLC, reports it on a personal tax return, and then we're able to look at it and determine whether an SCorp election may make sense for that person. One other thing I should say on that is that it's not just sole proprietors. It's not just for single owners. If you have two members of an LLC and they set up an LLC and don't do anything else, they don't do an SCorp election, they're reporting all of their income on a partnership tax return. It's a Form 1065, and those profits will flow through to their personal return, but they're still subject to self-employment tax, those profits from a partnership. So even if you have multiple members and are reporting on a partnership, again, that same case, let's say the partnership has $200,000 of profits and each partner gets $100,000 of that carried over to their personal tax return, they're still paying self-employment tax on that profit. So looking at it and determining whether an SCorp election might make sense is beneficial for anybody.
So let's go to one of the questions, because it sounds like this is very specific to the business, right? You have to really get in and understand, what's going on. So we've got this question about scheduling an initial consult. Now, you guys call these a tax consultation. What's the term that we need to look for?
We generally will do a tax savings analysis with a potential client to kind of talk through their situation and I see if there are areas where we can help. And pretty quickly, you and the person you're talking to can determine whether you're going to be able to generate any tax savings by hiring us. So it's a pretty, it's a high value conversation to have with no obligation to buy or anything. Again, looking longer term with clients, we like to give as much value as possible up front because, again, the services are so value added that, we feel if we give away stuff for free just so you can see the value that you're going to get, that it's going to be really beneficial for people and could generate a client that will stick with us for, 10. I mean, we have clients that have been clients for, over a decade, so that's the approach we take. We're going to give you an initial consultation, give you as much value as possible, talk about deductions, talk about tax saving strategies, determine if any of those will work for you. And then if you hire us, we'll help you implement those strategies and make sure you carry them out and realize those savings.
Perfect. All right, so I want to go to two questions earlier on, and it looks like Michelle and Rachel are almost in the same room. Their questions came back to back, and they're very much related. Michelle said she hired a friend for her accounting, and then Rachel's asking, well, how do you tell if you have a good accountant? And somehow I feel like these are connected, right?
Yeah. So, this happens all the time. You'll see, and not to bash friends who are accountants. Hopefully my friends who I've helped don't feel this way, but maybe they do. No. So dealing with friends, it's often what I'll see often is okay, my friend or my uncle or my niece or someone is an accountant and they're just going to help me out with this stuff. Well, usually if you ask further questions, you find out that they're not necessarily specialized in small business taxation. So it's like, okay, they're a controller at a mid-sized auto manufacturer or something like that, or they're doing something that's not necessarily tax money. And I'll give you my background. I started out working with PricewaterhouseCoopers, which was a gigantic Big Four accounting firm, working with Fortune 100 companies. And to be honest, when I was an auditor for, Singular Wireless, which then turned into AT&T, was bought by AT&T Wireless, being an auditor for AT&T Wireless did not qualify me to talk taxes or any of this stuff that I'm going to be talking with you guys today about, because it's just a completely different skill set. So that's the thing that I see with people hiring friends, is that often those friends don't have the skill set. They may be great at what they do at their job, but very often their job is not, day in, day out talking to small business owners about how to maximize tax savings. And then, one other thing with hiring friends is, if it's your friend, they're giving you a great deal. Often they're not going to prioritize your stuff. They may be overworked, and I, maybe telling on myself from personal experience. But when I've had friends ask me for freebies, it's like, okay, sorry, you're at the bottom of the list. So if I got time, I'll get to you. If not, you're gonna be waiting for a while. So that's the other issue I see with waiting for friends. They're giving you some big price discount or even doing the work for free sometimes, and you're just not going to be a priority. You as the old saying goes, you often get what you pay for. So that's the other issue I often see with friends.
Wasn't there an insurance company a while back that was promoting calling your other insurance company for the breakup? That they would handle that. Do you guys do that? 1-800-ACCOUNTANT? Can I have you break up with my friend?
That's funny. I don't think I've done that very often. I mean, I have communicated with other accountants about situations, but that's a good. That's really interesting.
On a more serious note, what is kind of that conversation that you should have? I mean, because I guess what you're trying to get to is talking about the time that I really need to be kind of prioritized. My business is growing. That's one way to kind of have that breakup conversation. I mean, another is, I'm looking for a very specific knowledge base around my business. Are there others?
Honestly, when I've had people ask me how to break up with their accountant, that's usually it. Usually it is one of those two things. Okay, I'm hiring somebody else because it's been clear to me over the past couple of years that you're just overloaded and don't have time, or I'm hiring an industry specific expert. I'm doing retail with I'm selling car parts or something, and this accountant has a lot of specific expertise in retail, remote retail, for example. So those are the types of issues you can bring up with your accountant in general when you're breaking up.
And so the other half of that conversation, when we were talking about friends, and then Rachel's comment around understanding if you have a good accountant. So you mentioned some of the ways of understanding if you have a good accountant, meaning they don't have time for you or they don't specialize. But what if they are making time for you? They seem to specialize in your area. What are the other ways to tell are they good? I mean, to your earlier comment, you don't want to be getting too much money back, right? You want.
Yeah, that's a really good point. Often we'll look at our clients' previous tax returns, and it's you'll find things where you're like, oh man, your accountant really should have talked to you about this specific thing, knowing what your situation is and seeing how they treated your tax. So a lot of times I'll also talk to people who are like, I just don't feel like I'm getting proactive advice, or I don't feel like I'm, I hear all these things on the news about how the tax law is changing, and my accountant never talks to me about that stuff. I feel like some of this stuff should be applicable to me. So if you feel like you're probably not, missing out on things, or have a gut feeling that you could be getting a better result, you probably can. Very, very, very rarely have I had somebody come to me and say, I just feel like my accountant's probably not doing enough. And it's been very rare that I've looked at it and I'm like, oh man, they've crushed it. You've saved as much as you absolutely could. Usually it's like, oh yeah, it looks like they probably rushed through this, or they didn't have time to talk to you about this part of the tax law that just came out this past year. So even if they're being responsive and it's not a friend or family member, a lot of times you're not getting the best result just because of a variety of different
I should have asked this
reasons.
question earlier. Scrolling through the chat, and I see folks from different parts of the world. That we've got entrepreneurs all over, and some are going to have U.S. based businesses, but they're going to be living outside the U.S. Can you explain that relationship and
Yep.
how you can work with them?
Yeah, there's a very, it's a quite a different situation. So, for example, when I was talking about escorts earlier, I should have mentioned this. Someone who's not a resident for tax purposes in the U.S. can't even have an escort. So it's a completely different strategy if you are living outside of the U.S. operating a business in the U.S. We would look and see, depending on how much money you're making, if it should be structured as a C corp or maybe as an LLC, not taxed as an escort. So yeah, we have a lot of clients who are not based in the U.S. who have businesses in the U.S. and we'll help them set up the entities and come up with best tax strategies based on the fact that they're not in
Love
the
it.
U.S.
Perfect. Well, hopefully those that are outside the U.S. didn't jump off the jump off the webinar just yet. But yeah, good, great to know. So let's get to Leon's question. A little bit technical in the sense that he's asking: is an LLC obliged to file annual accounts to the IRS? Are there any fixed administrative or legal costs for an LLC in the U.S.?
Yes. So the answer to both of those are yes. So even if you don't have, and the consequences can vary widely based on the state that the LLC is set up in and where you live. In general, almost always you should file a zero tax return with the IRS, even if you don't have any activity for the year. If you have not dissolved the LLC yet, you should file a return with zeros, just so the IRS knows, okay, they don't have any taxes. Because what will happen is if you don't file anything, then the IRS assumes, okay, well, this person didn't file anything, so we're going to assume how much money they made last year in their LLC. How are they going to do that? They're going to base it on prior years and just come up with it. I mean, I've seen some crazy. I've had a client come to me once, almost in tears, saying, "Oh, I got this notice from the IRS saying that I owe, it was like $30,000 or $40,000." Like, I don't understand. I didn't hardly made that much money over the past couple of years. And I looked at it, and it was because they didn't file anything for their business. And so the IRS assumed that they were making as much money as they were in the past, and they were not. They had actually kind of wound the business down and transferred the customers to one of their children. And so it was just a situation where it was like we easily filed the zero returns. The IRS took it off, so you want to file returns even if you don't have a lot of activity. And then from a state perspective, if you file, if you live in California in particular, you have to file those annual LLC returns with the state. And there's an $800 franchise tax fee for owning an LLC in California. And I just say that because so many of our clients, I mean, what is it? 1 out of every 8 people live in California. So because of that, a large percentage of our clients are in California. And so we'll see that all the time too, is a client will have their business inactive for 4 or 5 years, and they come back to us and say, "Oh, the franchise tax board just sent me a bill for $6,000." And you look at it and it's like, well, yeah, you didn't pay that $800 fee for franchise taxes every year. So now you've got to pay those plus the penalties and interest. And so it's a bad situation. So yes, you absolutely, that's a good question and not one that people ask very often until they get themselves in trouble. But yeah, you want to file zero returns if there's no activity. The second part of the question, is there an annual fee with the state? The vast majority of states, yes. There's a couple of states that don't have an annual fee, but generally the whatever your state's Secretary of State or divisions, the division of corporations or whatever it's called in your particular state, they will have an annual fee that they'll send out and you pay. So it's generally not that much money. California is by far the worst, that $800 fee. Generally, most states, it's going to be, $30 to $100 every year to maintain the status of the entity.
And it sounds like the value to having an accountant is they're going to keep up on this for you to make sure that everything's going out.
That's right. So generally, when we're doing tax returns for people, we're doing their business returns and their personal returns. And so, if somebody came to us, we're doing their personal return, and we did their business return last year. We know they set up a business with us or someone else. We're going to say, well, where's your, what's going on with the business? Oh, I didn't have anything. Well, we still got to file a zero return for you. And that's very frequent. People have things that happen in life, the sickness, divorce, all of these things that happen that can cause somebody to get behind on stuff in general. And that, a lot of times people just don't want to talk to us about it, but it's like, we're probably the best people to talk to about it, because we're going to make sure we keep you on track and help you get through those times. And if your business is on pause, we'll file everything appropriately, so the taxing authorities aren't trying to hunt you down in a few years with threatening letters.
So that's
and
a great segue to another concern that that I can imagine coming up, which is, I haven't been operating above board for the past couple of years. I've been making revenue, been growing the business, but maybe I'm not incorporated. Maybe I haven't been filing all my tax returns. The fear is, well, I shouldn't start now, right? But it's just going to get worse. So what do you do with somebody where, maybe it's not as bad as years, maybe it's just a quarter, or they did something incorrect last year and they're a little fearful? How do you come in to help with that?
We will come in and I think most of our accountants are the same way I am. What I will do is sit down with the client and kind of go through the situation and say, okay, here are the risks of, because sometimes it's better to let the old demons fade off into the distance. But I'll sit down and say, okay, here are the risks and the costs. So if you're behind and you haven't gotten caught, so to speak, for a particular year, yeah, as a tax professional, I'm going to say, yeah, you should pay that. But here are the risks if you decide that you don't want to do that. But regardless, let's get you on board now and get you started. Whether or not you want to get caught up on things that you haven't been paying in the past that the IRS may not know about, that's up to you. I'm going to encourage you to pay that. I don't think accountants can be like, oh yeah, you absolutely shouldn't pay your taxes, because that's it would be an ethical breach. But what I will say is here are the risks and costs, and you can make your own decision what you want to do. I'm certainly not an IRS auditor, so I'm not going to go tell the IRS.
Got it. No, that makes sense. And what if you created the wrong entity and you've been operating under that? So, maybe in years past, the SCorp was what was in a blog post you read, and you created that, and you find out, what, this is not me. I'm operating as a solopreneur or more of an LLC with an SCorp. Is it easy enough to change that, and does that affect any back taxes?
Yeah, absolutely. And that happens sometimes. Sometimes we'll see people who thought their accountant filed an S election, for example, that escort election that we were talking about earlier. And then the IRS will come back and say, oh, no, we never got a record of receiving that. And so then, it's okay. Do we try to fight them on that and find proof that it was filed? Or do we just go back and amend the tax returns? That's always a possibility, as well as amending the tax returns to correct them. In a lot of times that's in the taxpayer's favor. So again, if we were going to amend a tax return, I would sit down with the client and say, okay, here's what the result's going to be. Obviously, if it's going to give you a positive result, we're going to file that thing immediately and try to get in the queue as soon as possible, so you get your money back as soon as possible. If it's a negative result, we're going to talk about do you want to file that? Here are the risks if you don't file that. And kind of go from there. We would also have a conversation about the statute of limitations. So, for example, unless they're under certain circumstances, the IRS only has 3 years after a tax return is filed to come after you for taxes. So I've had that conversation fairly recently with a couple of different clients. One who owed a ton of money. They were making a ton of money, got sick, didn't pay their taxes that they owed. They paid some of them, but not all of them. And they're way past the statute of limitations, and they're still getting letters. I'm like, they legally can't take the money from you because it's past the statute. In fact, I didn't even know if you paid it, if they could even accept it, because it's past the statute of limitations. Like I said, there are examples of cases where They can go beyond that 3 years up to 7 years. If you've underreported your income by more than 25%, for example, that's the biggest one. And if you've committed fraud, like if you've straight up just made something up, there's no statute of limitations for that if they can prove
that was
fraud.
an awesome part of the conversation. I'm always looking for little tidbits to share on the dinner table, and I think that's one of them right there. Right? I didn't realize it was 3 years just for simple mistakes. I figured basically they could come after you forever.
Yeah.
Interesting about the fraud makes sense.
Well, a lot of people hear the 7 years. Yeah, a lot of people hear 7 years. So most people that I've talked to, if they know anything about the statute of limitations, they assume it's 7 years. But it's 3 years unless there is what they call a gross misstatement, which is more than 25%.
So I was going to, and Rachel, I see your question. I just have another little segue here. We're going to get to that. But when you're talking about limitations, I mean, I know 7 years for me was personal taxes, right? You keep your old checkbooks for 7 years or something. So that brings up another question with this is that, let's say, my personal finances are tied, very closely to my business. Do you handle both, the personal and the business?
Yeah. Yes, absolutely. And in fact, it usually makes sense for us to do both. Every now and then we'll have somebody who has used the same accountant for 20 or 30 years to do their personal return, but they aren't super comfortable with business returns, and we'll do the business return. But the vast majority of cases, it makes sense because, like you said, most small businesses are what we call flow-through entities, meaning you prepare the business return, whatever the result is, the profits or losses from that return, then flow through into your personal return. The business issues a K1, and that K1 actually, the information from that K1 goes into your personal tax return. So yeah, it's very, I don't like to separate them if at all possible, because you just, there's something lost in translation usually if you're using two different accountants. So it usually makes sense to use the same
let's take it in the other
both.
direction where you already have, maybe you want to keep your business accountant. Can you run just your personal taxes through 1-800-accountant?
Sure, you can. I actually have a client that does that. He has and it's because his business is very, very large. He ended up, one of the clients I was talking about that I knew back in the old days when he was struggling to even, put food on the table. And now he's had a few investment rounds. And so his business is worth, hundreds and hundreds of millions of dollars. And so, he's using a big firm to do that, but he still wants us to do his personal return. And so that I guess that's a situation where you might separate it out. Hit it big, and you want somebody that's very specialized in very large businesses, because we don't have many businesses we're handling that are worth $1 billion. Generally much larger firms are going to be dealing with those, and they'll have a huge team of people working on those. So I do see that happen occasionally. If the clients get to that point, they're usually in good shape because they've
absolutely.
Really
all right,
good.
Rachel's question. She's asked it twice, so we've got to get to it. She wants to know about resources to teach herself about bookkeeping and accounting. I think this is great. I mean, to be an informed business owner, where can we point her?
There are different. That's a tough question, and maybe I'll get your information, Rachel, and send you a couple of things of ones I found. There aren't a ton of places that are very, very good at teaching people how to do this. That's just 100% honest. And the other thing is unless you're willing to put in a very large amount of time, it's going to be hard and you don't have an accounting background. It's just one of those things that I don't recommend. It's not rocket science, but you've got to dedicate, at least, I would say for somebody to be a decent bookkeeper, they've got to dedicate 80 to 100 hours learning about it. People will pick up QuickBooks and think, oh, I'm just going to get this stuff knocked out. It's going to be easy. The 90% of people I see use QuickBooks, even if they have a little bit of an accounting background, make it worse than if they wouldn't have touched it at all. Now, if you're doing very, very limited things with it, you're just tracking expenses and that's pretty much, and revenue, and that's pretty much it. That's doable, but the vast majority, I can't tell you how many times I've gotten QuickBooks files and they're just an absolute mess. And it's not because the person's not smart, because that's not it at all. In fact, I had an engineer client once. He had a PhD, brilliant guy, and he did all of the accounting completely backwards in QuickBooks. And I'm like, I couldn't even believe that he'd figured out how to do double entry accounting backwards. But we had to, that created a bunch of problems in the file itself. And so we had to go back and correct everything.
So let's maybe take the question in a slightly different, because I completely agree with you, but maybe we can take it in a slightly different direction to add some value. Although I do feel like a medical professional after I've read WebMD, so certainly, certainly it's possible to get yourself into trouble.
That's right.
But I think, the underlying aspect, I think, to Rachel's question and some of the others is that you don't want to look stupid, right? You're trying to understand how to interpret this data.
Oh yeah.
And so, I've got a good friend who's a financial advisor, and he says, it's amazing how many people come to you for advice. They're very successful, but they don't know, the basic terms. They don't know how to communicate. And so, I guess having 1-800-accountant, having the accountant kind of guiding you, are they going to kind of steer you in the right direction to kind of help you understand?
Yeah. Absolutely. So as I mentioned, we have our own software that's built into our platform. And the reason we built that was because it just makes it easier to integrate with our tax planning and all of our consulting services. We're not trying to, make a software company worth billions of dollars or anything like that. But we wanted a tool where people could download their bank transactions and credit card transactions. And then the accountant can have a conversation, can see it all right there, all within our portal. But yes, the accountant in general, or at least the way we do it, is we want to educate the clients on this stuff. And in fact, with our it's called Client Books. With our monthly fee for it, I think it's $39 or $49 a month. It's comparable to QuickBooks, but with ours, it comes with a human to answer any questions that you have about the software. So, if you have a question on, let's say, I need to make a journal entry for depreciation because that didn't come out of my bank account. And I know that I bought some equipment that I need to depreciate over time. How do I do a journal entry? One of the bookkeepers that we have that are specific to helping people with the software would answer that question. We actually have in the past offered bookkeeping support where we have accountants, and that's all they do is kind of give people little tutorials on bookkeeping and how to do certain things within QuickBooks or Xero or whatever software package. But yeah, I mean, there's a lot. There are some series on YouTube. I'll have to look them up because I don't remember which ones off the top of my head. I have seen some that are pretty good content. That will just give you the basics that will help you be able to, as you mentioned, is kind of talk the talk a bit with the accountant, so you're not completely blind when they're trying to go over your financial statements with you, for example.
All right, so let's go to a couple more questions here. We've got one from Cameron. Can you have two owners, partners under an SCorp? Will it need to be a 1065 partnership LLC? Current partner is a W-2 under the sister company. Sister company pays bills. Partner's entity for the payroll reimbursement. Is that a problem?
That's quite a bit of detail, but so I'm afraid to give too specific advice without getting a lot more detail there. But in general, the general question: can you have two partners in an SCorp? Absolutely, as long as both of them are U.S. residents for tax purposes, then you can absolutely have an SCorp with multiple shareholders. In fact, there is a limit. With a partnership, for example, you could have thousands of partners. With an SCorp, you can only have up to 100 shareholders in the SCorp.
Awesome. And that's where that tax savings consultation is really going to be helpful, because you can get really deep into the weeds on your specific situation. A little shout out here to Alyssa. She owns a pediatric clinic. She switched from her local CPA to 1-800-accountant. Looks like a little over a year ago, and just renewed for the next year. So she loves it. Nice job. And
nice.
So let's use that question to segue to Rachel's question, which is, what's an average monthly, yearly cost of an accountant? Obviously, you can give us, and I'd like to hear 1-800-accountants kind of fee structure. But what, if we already have an accountant or we're looking for one, what should we expect? What's kind of the norm?
For somebody who is just starting out, I mean, It depends on your situation, because now what we do is, we used to have one size fits all packages for new business owners. And what we found that was that some people needed more help. And so they actually wanted, we were getting feedback from clients saying, we actually need more help and I'd be willing to pay more, but there's not really a mechanism for us to pay more. And so basically what we did is we developed a pricing calculator. So based on the size of your company, how much revenue and profits you have, how many employees you have, what state you're in, what industry you're in, we plug all of that information into our pricing calculator, and it spits out a number based on, because what we're trying to do is estimate the amount of time that it's going to take, right? Because what we're selling is our time and expertise. So taking those factors helps us basically generate a quote right there on the spot for you. So it's tough to say exactly how much an accountant would cost without hearing about your situation. If you're a brand new business without much activity, it could be, as little as $1,000 a year. If it's you're a big business, it could be $4,000 or $5,000. A larger business could be $4,000 or $5,000 a year. It just really depends on how large you are, how complicated you are, and what services you're looking for.
Got it. All right, we got another technical question. I sent the form 2553 election by Small Business Corp to the IRS. Gary, do you see that one? Do you want to? Mm-hmm. Looks like you're reading it.
Yes. How long will it take for the IRS to respond for acceptance? Oh man, that's a rough one these days. When COVID started, the IRS basically closed all of their offices for 4 to 6 months. And so that created enormous problems and really terrible things with their wait. They thought they were going to be able to work from home, and then they couldn't figure out how to do it securely. And so literally, and if it's actually kind of fascinating operational problem that they're facing now. So if you're interested in this, do some Google searches, you'll find it really quickly. So basically the IRS shut all their offices, said, okay, guys, just stand by, get ready to come back when we give the word. Well, they didn't give the word for like 6 more months. And so they rented trailers to put all of the mail in. So they had tens of millions of pieces of mail sitting in trailers that they've rented. And so I have clients who sent them correspondence back in April of 2020, and they still haven't heard back yet. So, it really depends. Some clients, I feel like the mail's just been lost and is never coming back. The other problem, though, is that when you're calling the IRS, you can't hardly get through to them now because there's so many people in that situation. They still have millions of pieces of mail that they haven't, responded to. And that's creating all sorts of issues because they can't take all the phone calls. So the last few times I've called the IRS, I've sat on hold for 45 minutes to an hour, and then I just get disconnected. So it's I was just talking to somebody in the shipping business about how the frustrations with the global supply chain and, how much it's costing to rent containers coming from China or other places in Asia. And it's the same type of operational problem. There's just, until the IRS gets caught up, it's going to be tough to get responses from them. So the answer of how long will it take for the IRS to respond for acceptance? The answer is generally they take about 60 days. Now that you may hear back.
Is it worth sending? Is it worth sending again, answer. Or is the one enough and you have it on record?
Well, if you can show that hopefully anything you send to the IRS like that, I would encourage people to send certified U.S. mail, because then you at least have a tracking number that you can show, hey, I sent this to the Ogden, Utah office on this date. It was accepted by you guys on this date. And so I did send it. For a lot of people, that's too late because they've already sent the stuff without tracking. But that's a tip for anyone going forward. Anytime you're sending something to the IRS, in your mind, think, okay, what do I do to protect myself if this thing gets lost, either by the mail carrier or by the IRS itself? So you obviously want to have tracking for that. If it was me, the election for the 2553, that's one of the things they're fairly flexible on. One of the very few things the IRS is flexible on. what will happen if they don't receive it and you don't ever get a notification back, and you did file a tax return like an 1120S, which is the tax return you'd file for an SCorp. If they send you a notice back saying, hey, you filed the wrong type of tax return, then I would do it. But I feel like if you sent it now, it's just going to gum things up even more. And I've had people send things multiple times to the IRS that have just made it worse. So if it was me, I'd wait 2 or 3 more months. Maybe by then the phone queues are working. Back in the day, what I would have said, pre-COVID, I would have said, call the IRS and ask them if they got it. And they'd easily tell you, yes, we got it, or no, we didn't get it. Please resend. And you can even fax it. That's the answer that I would have given you 2 years ago. But now I would just wait and see. Hopefully they will have it to you within another month or two. But like I said, I would just proceed as if it's going to be accepted, especially if you've got that tracking info. And even if you don't, again, that's one of the very few things the IRS is flexible on. So even if you filed an 1120S and they kicked it back and said, hey, you can't file this, that's not the entity type we have on file for this EIN, you could then even file it at that point. But as long as you're treating it as if it's operating as an SCorp, you could even do it retroactively. Again, one of the very, very, I hate to even tell people that the IRS will do anything retroactive, because the 99.9% of the time they won't. But with the S election, they actually will give you a break on that if something
Nice.
like that happened.
All right, appreciate it. Let's go to Jimmy's question right below that. Do the owners of an LLC pay taxes, or does the LLC entity pay the taxes?
The profits or losses from the LLC flow through to the owner's business return. So the owners are the ones who pay income taxes. Now, the LLC, some states have franchise tax for like, for example, I mentioned California. They've got that minimum $800 franchise tax. That's at the entity level. But the actual income tax is paid by the business owners themselves based on the profits that flow through to their personal return from the LLC return.
Did we answer Rachel's question? I'm reading it for the first time now. Will you then not be taxed as an S-corp without correspondence from the IRS?
Well, what I would do is proceed as if they did accept it, and then if they don't, then you can resolve it with them through. And again, that's I, as an accountant, have dealt with that issue literally hundreds of times, and so it's something I could easily take care of. I know for somebody trying to do it themselves, it would be kind of nerve-wracking to go through that. But as an accountant, if it were me, I would just proceed as if the IRS had accepted the S election, and then if not, I would work it out with them later. Again, it's one of the very few things they're flexible on.
Perfect. Okay. All right. We're nearing the end. So if you've got some of your last questions, feel free to put them in. I'm scrolling through to make sure we get everything. Rachel had mentioned, would you do a second look after my first year of business taxes?
Oh yeah, with our clients, we always look at their previous year to see if there's things we need to change or amend. I mean, that's generally not something we do for non-clients because we'll do a deep dive and it takes time to do that. But for our clients, when they send us their personal tax returns, especially if you mention to your accountant, hey, I've got some concerns about this return. Can you just look at it for me? Of course, they'll do a really deep dive on that and let you know if there's any opportunities you missed out on and see if there's an amendment we need to do to save you money.
So when you start talking about deep dives, one of the first things I start to think about is security, right? And so, we might be able to kind of say, okay, if I'm working with a friend or family member, I trust them to do this deep dive. Michelle had pointed out, mentors had told her that, the accountant really needs to understand your business just as well as you do. That's a lot of trust. I mean, that's a lot of, opening the kimono and showing everything. So can you talk about that specifically with 1-800-ACCOUNTANT and that aspect?
Well, in general, we call it the financial undressing. Like, you don't like to do it, but once you do it, we are able to help. Again, the vast majority of cases. And as I mentioned earlier, I'm not going to say 100% because I'm sure there's someone I'm not thinking of that maybe didn't make get more money back in taxes than they paid us. But the vast majority of people, I was just looking at a case right before this webinar started where we, the first year through the SCorp election, some entity restructuring, some retirement planning, helping them set up a solo 401k. I mean, I think we saved the client almost $30,000 just in 1 year, and I think they paid us $2,000 or $3,000 for the year. So that return is 10x. So we'll go through with you at the very beginning and develop a tax plan and a tax strategy that we'll track with you in our regular meetings. And so we use that document as kind of the, here's what you told us at the very beginning. This is what we're shooting for, based on the fact that you think you're going to have X amount in income. If we set up help you set up a solo 401k or do some retirement planning things, we're going to have this. If we, do some accelerated purchasing of equipment or something to help you that you were planning to purchase over the next couple of years, we accelerate some of those purchases and that's going to save you Y. So we developed this tax planning document that you're able to refer back to in all the meetings that we have with our clients. So once that financial undressing happens, it usually only has to happen once, and we pretty much know everything, and we're able to track.
That's awesome. All right, Gary, I've got a product for 1-800-ACCOUNTANT. You mentioned financial undressing. You should send a branded bathrobe to new clients every time you go through this process, right? It's like, you've made it. We're good. Here's your bathrobe.
That's actually an awesome idea. I love it. I might steal.
All right. So Rachel mentioned, Rachel was the one who mentioned she dropped her contact information. So if you can share with the group later and share with me as well, I can include it. Some of the resources that you like, for this, because we do want to feel confident in our business to ask the right questions. And I would respond to Rachel's most recent comment about hoping to have enough knowledge. I mean, that's really what this tax advisory services is for, really, to kind of take a look from a second opinion. Maybe you're not switching over, but you just want a second opinion on what's going right or wrong.
Yeah, that's right. Yeah, and again, that's why we structured it. That's why we call our first call, the tax strategy analysis, tax savings analysis. Because we really are going through, and the feedback we get from clients, we do a survey after every single contact we have with clients or potential clients. And a lot of times what we'll get is, I'm just not ready to pull the trigger yet, but thanks, I learned a lot. So even if you're not considering purchasing anything at this point, or it's worth at least talking to someone to see if there's some like low-hanging fruit that they help you with. Obviously, we're not going to get, into your stuff in so much detail that we're going to give you a huge document of a list of things to do until you become a client. But so at a high level, they're going to talk to you about certain things that, and again, I haven't heard many people who have said, oh, that was just a waste of time and wasn't interesting at all. The vast majority are either, okay, I purchased a thing because a product or service because I'm ready to go. Or they've said, sorry, I'm tapped out at the moment. I can't do it for whatever reason. But thanks for the.
No, that's awesome to know you guys do that, because so many times I think when we have these kind of free opportunities to get analysis, you're thinking, well, I don't want to waste your time because I know I'm probably not going to switch, or I don't want to have to come up with some bullshit excuse later about like, oh, I really can't. But you're definitely not getting the bathrobe until you become a client.
Exactly.
Gary and I have already decided that. Yeah.
That's right. Yeah, you're not getting the bathrobe and super detailed tax plan.
Right. So wrapping up here, Leon asked the URL for Gary. I assume he means 1-800-ACCOUNTANT, and there are thousands of accountants. It is Gary. It's 1-800-ACCOUNTANT.com. Yep.
Just 1-800-accountant.com. So that's how you can get in touch with us. You could also call us there, 1-800-ACCOUNTANT, which is, I think, 800-222-6868. And that would route you to somebody who can have that initial consult with you.